Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Hello, Yoni Schmidt here, hosting today's episode of the Same Day Podcast, where I connect with top business and real estate leaders as well as entrepreneurs. Past guests include Chip Gabrino, a local restaurateur entrepreneur, Elliot Nelson, CEO of the McNally's Group, and Morgan Martin from Merrill Lynch. Today's episode is brought to you by Chris Lyle of State Farm. Chris Lyle's State Farm helps you protect your most precious assets and investments. Whether it's your home and auto investments, rental properties, or other valuables, call Chris Lyle State Farm for your quick and painless phone call to save double digits on your insurance needs potentially. So he did save me $5,000 one year. So that was great. Today's episode is also brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company. We're helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth by removing the headache of real estate ownership. If you have whatever you have, a single-family home, condos, townhouses, apartments, we have the management solutions for you. Go to Keyrenter PMC or email us at info@keyrenterpmc.com. Welcome to our podcast, where today we have the pleasure of speaking to Grant Shipman, the founder of Livingsmith and a leading expert in co-living property management and investment. With over 20 years on hands-on experience, Grant has propelled Livingsmith to impressive heights, maintaining 97% lifetime occupancy rates and pioneering the first ever co-living course. His company offers a range of services from do-it-yourself guides to full-service property management, addressing both housing and climate crises. Grant's dedication to creating 21st century households has established him as a sought-after mentor and thought leader in the co-living sector. Today, Grant will share his insight into the co-living industry, smart investment strategies, and the importance of building community in modern living environment. Join us for an enlightening conversation. Welcome to the show, and thank you for being here.
Hey, thanks so much, Yoni. You and Matt and the team having me here is a really big honor. I'm real grateful. I'm excited for this. This is fantastic.
Yeah, love to have you here. So let's dive right in. And this is a question that I mentioned earlier on in our conversation when we just hopped on. My biggest question: tell me, what is the difference between co-living and house hacking?
Yeah, this is such a great question. It's actually. You have the open-heartedness and mindedness to ask it, where other people are trying to ask me questions, and I'm like, that's what they want to ask. They just don't want to say it. So beyond house hacking, a strategy where you buy with owner-occupant financing, rent out extra rooms to pay off your mortgage, and then after about 12 months, you turn that property into usually a traditional, long-term lease. The co-living is it actually can be beyond house hacking is a great way to buy a co-living property. What happens though is that co-living is, instead of putting a lease on the entire house, that same house would have a lease on each bedroom, and then that model, that house hacking model, where if somebody is house hacking and they have great property management set up for that, then that 2-3x the rental income each month continues past that first 12 to 14 months. We actually, when I came out with our course, the term co-living wasn't known in 2019, so we called it beyond house hacking. So you nailed it. It's just going beyond it and continuing to get that revenue.
Yeah. So just to be clear, I guess the house hacking, which I've done in the past, right? I bought a house and my earlier 20s, I had a bunch of friends. It was kind of like a handshake transaction, right? I don't necessarily know that I had a lease with them. They were paying me rent, and it was supplementing my income, and also I was living there, right? And they knew that I owned the home, and they knew that I was essentially like quote unquote their landlord, but really it was just a couple of friends. Right. In the co-living sphere or space, right? Someone could say, okay, I'm going to buy this house. It's going to be in an LLC. I may or may not live there, right? And
Right.
I'm going to rent out each bedroom, right? And maximize the returns on this. And, if I'm living there, the people who are renting, if I'm using a third party property management company, don't necessarily know I'm the owner. Is that true?
Yoni, you nailed it. It's actually, you nailed it better than a lot of people that are stumbling their way through co-living, their current investors, is whenever we often buy properties syndicating using using house hacking. But whenever there's a owner or an LLC member, we refer to them as founders. Whenever they are living in a house, nobody knows it because the egalitarian nature of the house, everybody's on the same footing, makes for a much better quality house. Nobody
Yeah.
wants to rent a room from, when the owner's sitting in the living room watching you, right? Yeah.
Right. The question then becomes, say one of the roommates, right, or tenants, call them, is doing something that may violate the lease, right? And the owner is living there. Have you ever been in a situation like that where essentially the owner now has to either deal with it and say, hey, you're violating the lease, right? And I'm going to call you out on it, not because you know that I'm the owner, but because I live here too, maybe. Or do they reach out to their property management company and they say, hey, this person is violating their lease agreement by, housing an unauthorized pet, let's just say, for example, right? Go ahead.
You're hitting on the $256 million question. And I use a specific number because this is in regard to, problems or conflict, which happen in every single group of people living together, related or not, on the same lease or not. But it is unique to co-living because, and this is the reason it's $256 million, Yoni, is that amount of money has been flushed down the drain in institutional hedge fund investing for people who don't know how to handle tenant conflict. And or when there's a problem, right? Whether it's an owner is involved or not. And so how does this work, right? Do you contact the property manager or do you just, talk to the person directly? And it's been really interesting because these massive, Common is a $112 million startup. And in June, so last month from this recording, they just went bankrupt. And so they bumped that up to the $256 million that has been wasted.
Wow.
Because of tenant conflict. And what's weird to say is my company has thrived. And the reason is I lived for about 20 years in the intentional living community. So these are the OGs of unrelated adults sharing a house. We're talking old hippie co-ops, communes, house shares. I kind of accidentally ended up there when I got married really young, and that marriage failed. And so I did the unexpected and moved in with a bunch of hippies in Austin. Actually, wow. the house that I moved into was so incredible. It was started in the later 70s, and so many of them, half of the house went on to help start Whole Foods, the grocery store.
Oh, wow.
So they have their systems worked out because people who live in the intentional living community, they're not there because they can't afford to live elsewhere. They're accomplishing amazing things. And then these institutional investors, other real estate investors, they just have their property management, investing acumen, and it's been failing left and right in this. So to answer your question, to say why it's such a huge question is, and the difference, I think 100% between success and failure is that we have one is tenant conflict's important. If you don't have conflict, if you don't have somebody thinking somebody else is breaking the rules, whether they are or not, then you don't have a group of people getting to build trust and appreciation for each other, right? If you don't have conflict, you don't have that built up relationship. But if you don't have a way to resolve that conflict, then you just have what a lot of people are experiencing, which is high tenant turnover, property damage, and ultimately, $100 million company goes bankrupt, a $30 million goes bankrupt, Star City, Ollie, Hub House, you
Wow.
name it. I mean, we don't know about these. They're not spoken about. Even the other leading voices in co-living investment, I talk to them and they have no clue, right? We kind of just have our heads down in a lot of ways. But to say is what we do is there's a conflict resolution system. I learned like exactly, like nose to toes exactly from the intentional living community. It has nothing to do with the property manager, right? You go tattle, that doesn't build a relationship, but the house has that as part of our property management system. They have this to resolve conflict, and so whether it's the owner or it's not, it takes conflict, and it 99% of the time it turns into a beautiful thing where the next day, those two people are going to grab tacos, for lunch together, even though they thought the other person was the devil the night before. And then the 1% that it doesn't, then that just gives the house a chance to protect itself and get rid of a bad egg. That happens on occasion. I mean, yeah.
Yeah. So interesting. So, do you ever come into, before I want to go into like the nitty gritty of like what you do, what Livingsmith does. But before we do that, another question that kind of popped up in my mind through what you were saying is, what's the difference, or has there ever been a scenario where, the co-living is also co-ownership, right? You have a 4-bedroom house, 4 people together come together, they want to buy this house and also co-live in it and essentially invest in real estate. Is that something that you've seen?
Interesting. So there's no non-owner renters. Is that the scenario?
Correct.
Yeah. It's, this would actually be the difference between what I would say is co-living, meaning this house sharing that's been happening for centuries. Co-living is a property management, meaning a renter property manager relationship. Like it's for the mainstream. There's always been rooming house, boarding houses. They're wonderful. They're a wonderful housing option that's needed, but nobody wants to live there longer than they have to. Where what you're talking about, and it's still happening and it's wonderful, is I would put that in not the co-living world, to be technical, but to put it in the intentional living community where people are sharing equity. They might be sharing groceries. They might be sharing a lot of things. And these are, I mean, when people team up, I mean, I think it's so great about your company. You guys have brought people together because business is a team sport, right? I would rather get half of something that has a 100x the profits than all of something that has 1x the profit, right?
Yeah.
So
Sure.
So what you're saying, it exactly happens. I would say it's and there's conferences for that. There's all these things for that because the shared ownership, shared living, shared other things are really outside of that co-living property manager renter relationship.
Yeah. Maybe that's more suited to things like Picasso and vacation rentals. I don't know if you've ever heard of them, but they have a very interesting model. These ex-Zillow executives who came together and put together Picasso, which is more for just vacation rentals. And, you get to spend 44 days of the year at your vacation home, right? So it's not necessarily the same thing, but interesting. So, okay, tell us, I guess, a little bit about, what inspired you to found Livingsmith, and, can you dive into what is it exactly that you do?
Yeah, the easiest way to put it in a sentence is, I went from delivering Domino's pizza and renting a room, no savings. Nobody was going to give me a loan for a house. And 15 months later, I had financial freedom and a $2 million net worth because of co-living investment. And so I experienced the treasures the wisdom that the intentional living community has, which is households out of unrelated adults. I mean, that's what's happening all over the place. It's been happening since, oh wow, and I mean in 2003, the most popular residential lease was a one-person lease, if you really drill down into the data. And co-living offers that because all things being equal, people would much rather live with others than live alone. And so if that's a positive experience, then man, people get a beautiful house in a neighborhood for the price of a room. So for me, like the kind of the I don't know, the end or the beginning of my story was, I wanted to, I was delivering Domino's. I was a single, lonely guy. And I read all the Keller Williams, the Rich Dad, the Bigger Pockets. And I was like, this is awesome. I want financial freedom because then I can get married and I can have kids and I can have the time to enjoy those kids. This is so exciting. I did all the math with, okay, I can do small multifamily. I can do this. And I thought, man, in 10 years, in only 10 years, if I don't screw up and I have no bad luck happen and things go exactly how I think they are, I will have financial freedom. And I was like, well, I mean, that was a tough pill to swallow, but 10 years is way better than not at all. So right. I went after it. And during that time was kind of this, I came upon a house and I learned, I was like, oh, everything I learned from the intentional living community is very, very profitable. And so I zoomed that up to 2 years and, wow. we got 2 babies. We got a house in Rocky Mountain National Park. It's just fun. I get to do what I love. It's like the thing I was so passionate about became the thing that seems like the number one investment strategy as far as I can tell. It's nice when that kind of works out.
Yeah, definitely. So do you work with investors today that would go buy a house and you basically parse it up by the room and handle their investment, leasing up the property by the room? And I guess in that instance, you can charge a little bit more for each room and end up netting more than what you would if you were renting it out to a family.
Yes. So that's exactly right. We work with a number of people. Some people are able to do it by themselves. Some people we team together. So real estate syndication. And then it's like we're working with a number of people in Jacksonville right now, in El Paso. The legislation is kind of as legislation is going the wrong way for Airbnb, it is going a beautiful right way for co-living. Like this month, effective July 1st, 2024, all of Colorado has banned any restriction on unrelated adults living together.
Yeah. So there are restrictions in other states, right?
Exactly.
Maybe Oklahoma is you can't have more than 3 people living together that are unrelated. It doesn't work. I mean, look at college towns and college campuses, and I mean, everyone is violating this, right? I mean, to be fair, right? And that's something that it's hard to enforce. How would you enforce something like that?
Well, the number one thing I think is real estate and particularly real estate that's high in demand. Right. You're multifamily, single family houses, right? Like everybody needs houses all the time. But when it's high in demand, it is so easy to make money. I always say, just follow the law. There is zoning rules, but in most every city, county, etc., there is places where it's perfectly fine. And there's also states where not only is it fine, is they really want this to happen. They're actually the government has a number of incentive programs because the housing shortage has been such a challenge to small and large governments alike. So to say is, I think being aware of zoning is as easy as Googling the planning, building, or code enforcer in that jurisdiction, and just asking them, hey, I want to lease rooms out. I want to buy a house. I want to lease rooms out to help people who can't afford rent. Where can I do that, like legally? And these people are public servants that are paid to help you. And usually they love that kind of question. So,
yeah. Interesting. Tell me, I guess, a little bit about the areas that you operate in. Is it easy for you to come into other markets if you get plugged up with, good property management that can handle all aspects of the day-to-day, or are you specifically in one area and you're expanding into neighboring areas?
Yeah, and I like this because if I was listening to this, I kind of accidentally became like the owner of the company that's real successful at this. Like in the beginning, I was like, surely other people know, and I was going after it to ask questions and could you manage my properties? When I started, I had no intention to manage my own properties, and then I couldn't find anybody who was great. They either did college housing or senior housing, which sure, technically it's a niche of co-living. But when I use the term co-living, I'm meaning, hey, this is non-niche. This is for mainstream. This is the civil engineer that you work with, in an office, or a cubicle next by, or the HVAC technician who just came and solved all your AC problems. But what we do is actually we've got our hands full. We used to be expanding, and now we have our hands full because the current the one company, large startup called Pad Split, that hasn't gone bankrupt yet. I really, really hope they don't. They've done a lot of work in helping investors understand the opportunities. By the way, you never need to help renters understand the opportunities because we have waiting lists. People are dying to rent a room that's in a quality place with quality people, right? They love that, and but this company Pad Split has got investors so excited. So for example, last month I was at a doctor's appointment in Dallas, and part of my teaching team said, hey, these people in Dallas really, really want to meet you. They're with Pad Split. They're really feeling the squeeze, but basically this company has done a great job at getting people excited about it, but they haven't equipped them to actually manage. And they're just a software platform. And so these people and Pad Split's in 20 primary cities. So suddenly, instead of us figuring out how to expand, we're just trying to figure out how to support these Pad Split people, because they're getting charged by Pad Split a little bit more just for a property management software and placing services than my property management company offers for full-on property management and asset management services. So we're trying to nicely respond to people who are saying, hey, can you come manage? And just saying, we're not in that city yet, and we want to expand in a way that, we make sure we can give you good quality and enjoy our lives. But at the same time, I feel for these people, because they, like this guy I met down in Dallas, I saw a bunch of their houses. They're beautiful houses. They've done a great job. This one guy's only 9 months in, and he's got 8 properties, and he's only 28, right? Like, but he has no clue about management. He's just doing his best. And yeah, I mean, can you imagine?
And for him, the traditional long-term rental for a family, it just wouldn't work on the numbers, on the return. Is that safe to assume, or?
That's right. In your major MSAs, and so it's just very hard to have a property cash flow. And with co-living, suddenly a property is going to cash flow $1,000 to $3,000 a month, which is, yeah.
What's the rule of thumb, I guess, let's call it, right? You say, if I buy a house, long-term rental, it should, the rule of thumb used to be, when my grandfather was teaching me this, was 1% of the purchase price. And then if you wanted to make it a short-term rental, which my father does in the city that I was born in. It's 3 times long term, right? That's kind
Yeah.
of like the rule of thumb, right? And even today in Oklahoma and Arkansas and Kansas and in the markets that we operate, that's kind of the rule of thumb. If you buy a house for $100,000, it should rent for $1,000. If you make it an Airbnb, it should be $3,000 a month in top line revenue, right? That will cover all your expenses. Co-living, is there a simple back of the napkin math formula for this?
So with rates changing and different loan programs coming out, it's the rather than something nice and easy like that, we just have a like a calculator similar to what Bigger Pockets, a number of people offer. But what it includes in there is what would this be as a co-living investment? So if the simplest way to say is a property that would rent out on traditional rental, if you just put that in Rent-A-Meter, then that property should make at least 2, if not 3 times as much revenue and as a traditional rental, and at least 5x to more the profits. And the profits are what's important, right? That's the big one. So if that's the simple rule of thumb. My wife does Airbnb. She loves it. And if you love hospitality and you love managing cleaners and all of that stuff, awesome. If you want long-term rental that's got significantly more money than just putting one lease on a house, like co-living is pretty rad. It's hard to do.
Yeah, but some would argue that a 4-bedroom house, you could rent it to the traditional family, one lease, right? Less problem. In this instance, in the co-living, are you under 4 leases or is it one lease? And okay, so it's 4 leases, 4 times the amount of problems because you have 4 times the amount of people. A lot of things could happen there, right? Each person has a significant other. They come over, they sleep there. All of a sudden, you go from a 4-bedroom house to an 8-people, a 4-person house to an 8-person house. Lots of nuances and complexities here, I would imagine. Tell me, how do you make sure that the personalities of the people that you're putting in the homes aren't explosive? In today's very contentious world, we're not going to talk about politics. We're not going to talk about social issues. We're not going to talk about any of these at all. But putting 2 people together or 4 people together in a house that could be on different sides of the of the spectrum of politically, socially, fiscally, whatever you want to touch on. How do you make sure that it doesn't become into a hostile situation, right? And I can only imagine the things that you must be dealing with, almost like babysitting.
Yeah. Well, and I want to, Yoni, like, you nailed it. And this is such an important part of my like life vocation is co-living is happening even when people don't know the name of it. One guy from Michigan, he just read our book, Welcome Home. And he's like, Grant, he goes, my daughter and people she lives with, they're doing this. I didn't even know it had a name. And this or the number of, even adult children living with their parents, these non-traditional households, it's just happening, and it's been happening. And so you saying, hey, what about this issue is so important, because it is easy to talk about revenues. Like, ooh, it's all the revenue,
Sexy.
revenue. Yeah, sexy. You get a lot of money at the beginning of the month. And by the end of the month, you hate real estate because you're stressed about property management, and all your profits have vanished, right? Poof. And that is really, if you can imagine the difference between if somebody who was just doing the traditional long-term property management system. And now they said, I'm going to have a short-term rental house, but I'm just going to use this same property management strategy. It would be a nightmare. Like my wife yesterday there was a turnover in Estes Park in one of her properties, and the cleaner showed up, and it just seemed like the people had left. Well, actually, they didn't know that they only had it one night. They thought they had it another night. So it took hours to clean up all of their stuff, to make sure to not damage their stuff, to have it ready but that requires a special type of management. And so what you're getting at is so key. With co-living, we have what we call the co-living gold standard. It's a special type of property management. It includes setting up the household, or setting up the house. And we use the term household to mean the who and the how is living in the house. And when you have this is what is the result. So the result is, for those of you who are really big in numbers, and Yoni, I know that your company like drills it on numbers. You can't get the success you guys have without it. We've had a 97% occupancy, our lifetime average, even through COVID. Our renters, their average one is staying over 2 years, and one full-time property manager. Maybe a $52,000 position is managing 140 leases.
Wow.
So that's comparing things with numbers, and this is a beautiful system. Everybody loves it. Like I did what Brandon Turner said. When he had his little daughter, I think he said her name's Rosie, he bought a house for her that was on a 15-year mortgage that would become her college fund. I did that same thing with my little baby, who's now 2.5, and then I've got a 1.5-year-old. But the renters know them. They love their house. They really dig each other. They're so grateful. And this is not the exception. If the investment strategy fits the rental strategy, fits the demand in market, you have amazing things happen. Otherwise, you have explosive $256 million of startup capital going down the drain, not to mention all the little individual investors like us, that just could just disappear, all their hopes and dreams and work.
Yeah. I mean, I've generally enjoyed owning some real estate long-term, and, just letting the tenant pay my mortgage and, pay my insurance and my taxes. And, you look at the principal pay down as a forced way of, avenue of savings. Right. And, when we look at asset values, right, over the last 5 years, I think, I just spoke to Matt Zalk earlier this morning, and he was looking at the numbers and drilling into the data. He said something about, asset values have gone up 45% over, a pretty short period, right? So,
right.
Costs are up. Sure, inflation is definitely squeezing investors. Insurance costs are way up, if you've taken a look at that recently. Yeah. But at the same time, on your equity, if you bought $100,000 house and you put down 20%, you've enjoyed a pretty good appreciation on that money that you put into the home. Talk to me, I guess, a little bit about your fee structure, which I guess could vary from, traditional property management companies like us, where it's like, 10% of gross rent collected per month on a single family residential home, a flat rate leasing fee, a flat rate renewal fee, and then of course we ask people to put, a certain amount of money in a property reserve fund. It's their money. It's held in a trust account with us, and it's used for the purpose of maintenance, repairs, utilities when the house turns over and we have to take over the utilities. Tell me a little bit about that. And then I want to segue into fairness in pricing for the renters or the residents, right? Because each room is different and each space is different. And I think, there's a lot there. I was in college, and I'll tell you a little story about 804 Morningside Drive in Norman, Oklahoma, and some unfairness, but I think it was interesting. So talk to me about your property management fee structure a little bit.
Yeah, and it was only a few years ago we started managing properties we had no interest in. and you know what I mean by interest, right? We love managing
Sure.
third-party properties, but we always had 50% or more ownership in all of it. And so we started managing these third-party properties, and we always vet the owner, we vet the property. So if anybody listening, say they have $500 single-family home portfolio, probably only 40% of those homes are going to be work for co-living. So, for example, look at what your high room for rent is in your area, the high end. So for example, we're around $850 in like pretty much everywhere. There is if you're in, the middle of, say, Boulder, Colorado, or downtown in a special place that, then it gets to be, or say Estes Park, Colorado, like 1,000 or 1,100. But most everywhere, and this is the room rental market is different from, say, the single family market, but most everywhere people are going to pay between $700 and $900 for a room, and $800 is the sweet spot. So if a property rented out by the room that you have would be compelling enough financially to do with co-living rather than traditional rental, that's where it becomes like, hey, this might work well. You also need to look at parking, bedroom, bathroom ratio, and then we go down the list. It has to meet zoning. We talked about that already. So the house really needs to fit co-living. So when that happens, what we end up doing is we have a third party owner will talk to us. We'll have the application. We'll look through the house. We'll talk about the setup. They're going to need storage shelves. They're going to need, we put together a chore board on the wall. Like, people who move into these houses, they value things being clean and quality. Like if these people are usually single, and when they bring a date over, that date doesn't think, man, these people, they can't afford to live on their own. No, what they think is, they are like, man, this is a really nice house. Wow, this yard looks great. And they come in and they say, whoa, you live with really great people. You must have some kind of emotional intelligence, and wow, this place is clean. So the setup cost, we talk about that, but basically we don't we just do a 16% across the board, and if we don't actually make them more profit every month than they do if they landlorded on their own, then really the property doesn't fit for co-living. So it's our 16% rate. They love it, we love it. Or some people that have they're more the old school investors. What they want to do is they say, hey, I'll just take the same rent I was getting on this for traditional rental, and we'll guarantee that amount, almost like a master lease, right? We'll just guarantee this amount. We make a lot more money, but for them, they're lowering their risk profile because what we do is our property management walks the property once a month, because they fill up supplies and they leave candy for people in a note, and they say, great job on the yard, and people love that. And when when the property manager sees the property once a month, our properties year after year are getting better and better. So that's the two ways we do it. We do a guaranteed structure, or 16%.
Got it. And so on either of those, there's a setup fee because you come in, you put the chore board up, you set up the chores, who's responsible for trash this week, or this, that, yard cleaning, whatever it is, I'm guessing, right? And I'm missing stuff, even though, I'm sure there's a lot of chores in my house that, I should probably be doing a lot more regularly. Thankful to have people in my life to help. So, okay, interesting. 16% or a guarantee for their long-term traditional rental, and then you make the delta.
Right.
No leasing fee?
No, none. We it's as we grow, maybe we'll become a little bit more sophisticated, because maybe we're leaving more money on the table here and there. But the amount of money, like the pie is so big that we're just trying to make sure, our services stay quality, and we don't make that mistake other companies do of scaling too quickly because of opportunity. So and something else we really like to do is asset management, because that's where 95% of single family investors fail. They go and spend all their profits rather than having reserves. And so we do all the asset management side, because a co-living property, what we like to do is we want to set it up. We want to have it be a cash cow all the time. Those people love it. They never ever want to leave. Like it's just, I mean, once that fits you, unless your job moves you or you decide, like me and my wife did, to get married and get kids, you want to stay there. And but it's so great. Our goal is we would eventually buy that from the third property, the owner of the property, because if it fits for co-living and we've got a house set up and it's wonderful, awesome. Yeah.
Yeah. I mean, I have so many questions about pets and how do you, do that, and what kind of loan products do you have to, set up for these kind of, properties? Is it traditional financing? Is it commercial financing? Can you do, I guess, debt service coverage ratio loans are pretty favorable for this kind of situation, because your debt service coverage ratio must be, way over 1.2. I mean, probably closer to, 2, maybe 2.5. I don't know. It's interesting.
Yeah, you're nailing it. So I would say the one side, the acquisition side, is very, very similar to any kind of single family purchasing. Now, this can be used in multifamily. It's just not as popular yet, because whether it's closed-mindedness on my side or my I do a lot of study in multifamily investing, because it's the strategy is, multiple leases on one property, which is co-living. I had to learn a lot from the multifamily world. And so to say that the acquisition side is so similar, DSCR loans, owner occupant financing, conventional 20% down, all of these things are just, it's really easy. People are actually really great at getting those. The secret sauce then is the other part of what you said is, hey, what about pets? What about a girlfriend, sleeping over? What about out of town guests? What about all these things? And basically what we have is we have a lease that includes a household covenant. It's kind of like a roommate agreement. And we have this 40-point, we call it a 40-point complete household system. So rather than having to find people who get along, which you can imagine is very tricky, because, a group of friends that known each other for years, they move into each other and suddenly their friendship ended, right? So, but what the secret sauce is when Yoni, when you talk about, hey, there's chores at your house, there's these different ways that we understand that those who live in this house, this is how it works. This is how long you can have a dirty dish this place before it breaks the rules. But what we have is we make a household. We call this a healthy household. So if a household has no rules, it's chaotic. Nobody feels safe. Nobody feels like they can thrive. If a household has too many rules, it's strict. It's like a boarding house. Nobody wants to stay there a minute longer than they have to. But a healthy household is there's enough structure for people to feel safe. People feel like they can thrive, their uniqueness. So just to say, what we do is we set up a healthy household. The house pretty much runs itself. They handle their own conflict. They do their own chores. We're talking a 6 to 11 person household, normal house in the neighborhood, A-B level neighborhoods. And the property manager gets to stop by once a month and mostly just drop off candy and says, this is great. So I don't mean to make it too wonderful, but if the right recipe is followed, the brownies are delicious. Yeah.
Could two strangers be sharing a room?
We don't do that because we just make one person per room. Unless that room has an en-suite bathroom, then we'll allow like a couple to share it. But mostly these people are single, typically. So yeah. And I'm guessing there's some sort of calculation that you have to that's pretty subjective, I would imagine, to come up with that, room that has the ensuite versus the two other rooms that don't have it and they're sharing a hallway bathroom.
And that's also probably the guest bathroom as well. So, the rents have to reflect the value that each of the residents is receiving.
Yeah, and some people get into this and make it fairly complicated, and they have success with it. Our places, so far, all of our rooms are the same cost.
Wow.
And what's kind of cool is there's no seniority in the house, right? The beautiful thing is, if nobody is, then this is what I learned from this wonderful hippie co-op I was in. I said, hey, I moved in. I go, who's in charge? And they said, nobody. So everybody, everybody's responsible, right? And but what's great is there's no seniority. Everybody's equally responsible if somebody is causing a problem, or say their motorcycle is too loud, when it comes in, or all of the millions of things that can actually bond us together if we handle them well. But what we do then is, it's nice because the longer somebody lives in a place, they got their eye on maybe the room they want with the big bay windows, or the room they want with the in-suite bathroom. So it kind of is a nice little reward. That being said, the rest of my property management team are like, hey, we could make more money if we charge more for the bigger room. So we'll probably eventually get around to it.
Yeah. Yeah, because wouldn't the person who has their eye on the house or the room with the ensuite, do everything in their power to get that other person to move out so that they can, so that they can get that room? I mean, I guess we should all assume positive intent.
It's an interesting question. We've just had such good experiences with people. We just really copied the intentional living people on, how do adults live together and thrive. And what I think what's most surprising about it is, if you would go into a house and you would pick out your favorite bedroom, and we would have 5 other people, almost all other people would pick out a different bedroom. And it's a really odd thing. Like somebody like this one guy, he's we'll just call him Hank. But his name's not Hank. Hank is he loves his room. He's been there for 7 years. And his room does not have a bathroom in it. He's had a chance so many times to move into that, but he loves his room for this, that, and the other reason. And this is kind of how houses are. So somebody might have their eye on a certain room, but other people have their eye on a different room. So it's
enlightening.
It's a lot different from what from those of us, with just the real estate, like, hey, there's a focus on square footage, amenities, all of this stuff. It's a lot different from that perspective. It was very enlightening being around these people that this is where they've lived for forever,
Yeah. Sounds like the modern day kibbutz. Soon we'll have residents, I guess, also farming and gardening, putting their, fruits and vegetables in the backyard. Grant, what's the last thing that you wanted to leave us? I want to be conscious of our time here. What would be the last thing that you would leave our listeners with? It could be anything. What inspires you? What book are you reading today? Maybe some pour your wisdom on us.
Yeah, thanks. I would love to share a story, and it's not a happy story, because a lot of people that see the profits of co-living are not having a happy time right now. So I want to tell you the story, and but to encourage you how you can have an absolutely wonderful time. We call it the co-living gold standard as an investor, and investors, if you're interested in this, whatever your path is, do that path, because there's tons of money in real estate. Just learn how to do it awesome. But if you don't know what your path is, you're looking for it. Renters need this kind of housing. Society needs this kind of housing. This solves the skyrocketing rents, the housing shortage, the loneliness epidemic. I know COVID hit the news big time, but in 2019, the Surgeon General said, we have a loneliness epidemic in this country, and it's equivalent to people smoking 2 packs of cigarettes a week. And so this is a major thing. If you as an investor are called by the the revenues, the profits, all of this stuff. So listen to this story is back in 2018, I was at the Bigger Pockets Christmas party headquarters in Denver. And at that time, the movement didn't even have a name. It wasn't co-living, meant like hostels or something, right? Like all these words get moved around, but it's the same movement. And this one gal, she was an architect. She had a number of multifamily, single family, small multifamily properties. She said, Grant, like, this sounds great. I love this. Why don't I just do it on my own? I said, of course you can do it on your own. I go, but you really need to learn how to do it. She's like, I'm a very capable person. I'm great with it. And I was like, that's awesome. Like, let me know if you have any questions. And anyway, a year and a half later, I got a call from her. I didn't even know I had her number in my phone. I think this was well before I met my wife, and I think I was thinking she was pretty or something, right? But I get a call from her, and she's like, Grant. She goes, okay, listen. One tenant, I did what you said. I was like, did what I said? We had like one conversation, 18 months ago. She goes, I did what you said. And one tenant got in a fight with the other tenant, like hardcore fist fighting. And so the other tenant called the cops, and the cops showed up, but these two tenants fighting, they decided to team up, and then they were beating up a cop. So the other cop showed up. She goes, wow. Okay. She goes, I'm sitting in my car outside this house. She goes, I'm sure you've had this happen before. What should I do? And I said, we'll call her Angela. I said, Angela, I go, I've never had this happen before. I go, I'm really sorry. I go, I really hope you're the best, but I don't have anything to add in. And it was at that moment that it sunk into me that the property management side of co-living, because your risk profile should really shrink with co-living. But if you're interested in this, you can learn the gold standard side of property management. We'll have a link, but there's a free, anybody who's listening to this, a free book to download on it. You can schedule a call with one of my teaching teams, and we're even going to be doing a free 5-day co-living challenges. So anything that helps you all. But like anything in real estate, if you assume you know how to do it, but you've never learned, don't be Angela. Have it where it's like, this is amazing. So that's my wisdom I want to share, because co-living is powerful if you follow the recipe.
Yeah. I will say, real estate isn't rocket science. You can learn it.
You can learn it.
It's always best to lean on those with experience who have done it in the past and learn from their mistakes, right? And that's what we exist. That's what we exist for. You for co-living in Essex County, Colorado, and us in all of our markets. And this was enlightening and very interesting. Thanks so much for joining us today and sharing all of this.
Well, Yoni, thanks to you and Matt putting together this thing that actually helps people learn how to do this, right? Like you said, not rocket scientist, and it's a powerful show. So thank you again.
Now, of course, all about adding value and benefiting other people's lives. Thanks for listening and or watching. See ya.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.